Mark, I look around and I see lots of calm. I suppose that's to be expected on a day which is going to be so decisive. The Markets Live team reminds me this morning that stocks have a habit of ending election years in positive mood, just simply because you've moved through a potential risky event. What are you thinking this election day?
Yeah, and I think the macro tailwinds are still there for stocks. They're not as strong as they've been all year. I think some of them are fading a little bit. But I think the backdrop is still good for stocks, never mind the election. The other thing that's really confusing me is that the vast majority of people I talk to in the market seem to think that it's more likely Trump wins. I'm not saying high conviction, but that's the way they're biased. And the second bit is they seem to think that if Trump wins, there'll be a much bigger reaction in markets. And yet they don't seem to have that position on. And you ask all these people, say, what's your expected distribution of outcomes? And for most people, it's Harris, it's a much smaller move. Trump, it's very large moves. And yet they think Trump's more likely. Well, just waiting, do an expected probability of outcomes then, and you suddenly get a distribution which looks very favourable towards higher dollar towards the end of the week, higher equities, higher gold, higher Bitcoin, betting that way on a risk-reward basis, regardless of what the outcome happens.
What happens if we don't get a result, Mark, quickly? How do we work our way through the next few hours? How's the market going to cope with that?
So I think there's two things we need to delineate here. One is that we don't have an official result, but we kind of know what the result is. I take to 2020, we knew what the result was the next day in Asia. We knew within 24 hours. It wasn't official till 4 days later because of, recounting and challenges, but we knew which way it was going to be. And so I think that's the expectation, is that we're unlikely to have complete lack of clarity. There might be legal challenges, but we know which way the electoral votes are kind of weighing down. In that case, we play the kind of outcome. If it is genuinely uncertain, i.e. we're really closely challenging, say, Pennsylvania, where it comes down to like 1,000 votes or something, and we need to challenge that, I think that's going to be really, really tough for markets and a proper risk off. But I think that scenario is very, very low probability.
Well, let's talk a little bit about your wheelhouse as well, which is the emerging market story, and specifically the FX. We talk a lot about the kind of increased volatility in the yuan, the Mexican peso, among others. What EM currency is perhaps the most at risk right now in terms of weakness?
I think the perception out there is that if Trump wins, they're going to pick on the Mexican peso even more. It's had a pretty bad period, though, so I wonder whether we're quite far through that trade. I think targeting the yuan is people's going to be knee-jerk. But remember, you've got the PBOC on the other side, and the mood is getting much more positive about China. So I think it's going to be harder to challenge that, particularly in Asia. The one I think is most interesting is Brazilian real, because that's been hit really badly recently. But in fact, it's more of a China play than a US play, and it will really benefit from a better risk-on mood if that comes.